All right. Welcome, everybody. Happy Friday. We are here with another webinar today. I am your host, Ryan Faloona, and I am here with Andy Cole, CEO and founder, of Mighty Soldiers Trades. And we have some real excited stuff lined up for you today. We're going to be covering scanning for gaps and how to use Pro in order to do that. We're also going to be talking about how we trade gaps, and we're also going to be talking about chart patterns, support and resistance, and position sizing. So thank everyone for joining us here. Andy, are you there? Can you hear me, Andy?
Hey, Ryan. Yeah, I'm here.
All right, perfect. So how are you doing today? How have you been doing this week? First of all, let me first say, I hope you and your entire family are safe and healthy. And
yeah, Ryan, I was going to say that things are a lot different since last time you had me on.
Definitely. Indeed, they are.
And yeah, things are going great over here. If you don't mind me saying so, if I can just put this out there real quick, Ryan, if you guys are ever looking for motivation before your trades, type in Google, let's get it, Zahi, and you'll go to my page, Mighty Soldiers Trades. A great song. Check it out. It's good for motivation to get you going in the morning.
There you go. Awesome.
Sorry, I had to throw that out there, Ryan. That song gets me going every morning.
You don't have to apologize. That's quite all right. So thank you for taking the time out of the day to join us today. I'm really excited about this. I know I get a lot of questions about like how to trade gaps. Gaps seem to be something very important to traders in our ecosystem. And one of the reasons that I'm really excited about this is because the tools that Pro offers you make this extremely easy. They make finding gaps and then trading them extremely easy, provided you as the trader actually know what to do and what to look out for. So that's kind of what I wanted to cover today. And I wanted to kind of just jump right into this here. So
well, being that I trade pre-market, that makes it a lot easier for me. Benzinga has everything pre-market that you just said, so everything's there for me to find what's moving. And sorry, I didn't mean to cut you off though, right?
No, that's totally fine. That's actually perfect. I'm glad that you said that because I actually don't trade pre-market. And one of the things that I talk to people about all of the time on all of these webinars and even on like some of like the support sessions that I do and in the support chat is I'm constantly reminding people that nobody trades the same. No two traders are the same. And one of the things that's going to make you successful is being comfortable in whatever it is that you're doing. So some people are very, very comfortable and very, very good at trading the pre-market. I have never been good at that. So I said to myself, well, how am I going to increase my profitability? Let me just try not trading the pre-market, and I've never looked back since. Now, that's not to say that it can't be successful. There are tons of people that are very successful in doing this. So it's hit or miss. You really have to dial into what makes. You really need to do what is the most comfortable for you. And that goes for anything, any type of trading plan. So really, really important. I'm glad that you mentioned that. That's not, like I said, we'll get into the differences a little bit later on. Now, the pre-market is, even though I don't trade in the pre-market, it's still very valuable information for what's going to happen during the regular session. And I'm not just talking about news. I'm talking about what actually happens in the pre-market. So the first thing that I want to discuss here are gaps. So people, I get asked all the time, how do I scan for gaps? How do I scan for gaps? And I'll say that the easiest way that I've ever come across for scanning for gaps is using the movers tool. And as you can see here on the screen, I've got the movers tool pulled up on the left-hand side, and I have the details tool pulled up on the right-hand side, and I have the details tool set to the chart. Our charts are real time. They're powered by TradingView, and they're super nice. So this is one of the easier ways to see this. Now,
can I ask you a question about the charts real quick, Ryan?
Yeah, go ahead.
Does TradingView have volume by price as an indicator?
I don't think that, I don't know all of their price volume trend looks like. I don't know what all of the indicators are. I know that TradingView Pro has an additional set of indicators, plus the community also writes their own custom scripts. We don't have that through Pro. We have just the traditional indicators from TradingView through Pro.
Right. Well, yeah, I'm really happy about the upgrade. That's really awesome that you guys have real time Really nice charts.
Yeah, no, they're super sweet, and it makes this particular example really, really awesome. It just makes this entire process easy. So so real quick, one of the things that you'll see here on the chart is you'll see this blue shading. And what this is, the reason I have this turned on, actually, let me move back over to the 5-minute chart here. You can see there's multiple bands of shading here. And what this is these are the after-hour sessions. And by default, your charts are not going to look like this. So before we jumped into this, I wanted to cover how to switch these charts over. You'll notice here, let me move Andy and I out of the way here. You'll notice in the upper right corner of the chart is a little gear cog wheel. And if you click on that, it's going to bring up the settings menu for your charts. And you've got a bunch of different options in here. One of the menus here is time zone and session. And in here, you can actually set your chart to be any time zone. And you can also add what's called session breaks. And what session breaks are is this shaded area, if you will, that denotes the after hours and the pre-market and separates them from the regular session. For me, I'm used to this, so this actually just helps me visualize the data that I'm consuming and getting ready. So this is something that I turned on. Obviously, you don't have to. I find it easier when this is on. This is how you get to it. Gear cog in the upper right corner, select time zone and sessions, and then turn on session breaks. Okay, so now that we have session breaks turned on, we've actually moved into the actual chart here. Let me put us back in the corner. And so back to our gap discussion, how do you find gaps? So there's a number of different ways that you can find gaps, but the quickest and easiest for me is to load the movers, select which gap you want, a gap up or a gap down. If you want a gap up, that's a gainer. If you want a gap down, that's a loser. I'm interested in the gainers, especially for the sake of this example. The next thing that you want to do is you want to select pre-market as the session. And then you want to select session as the period. And what this will result in is this will only show you things that we're gaining in the pre-market. And what that actually does is that creates a gap. So I'm going to click on one of these stocks here. And this is a perfect example of what we're talking about. You can see here that this stock closed at about 66 cents. And then in the pre-market session, gapped all the way up to what looks like $1.60. Maybe even $1.66 or $1.60 in the pre-market, and then the market actually opened. So right here, you have a monster gap. And the reason that gaps are highly sought after is because clearly something is driving this. There's some type of catalyst behind this, which is causing this to happen. This is not your average price move. This is a much bigger price move. And these can be intriguing to trade for a number of different things. You can do a mean reversion trade. So the stock is gapped up or gapped down at a significant rate, and you want to actually, you believe that stock is going to revert towards the mean, so you take a position in order to capture that movement. The other thing that people like to do is they like to do what's called a gap and go, which is stock gaps up and then it actually takes off and continues through the regular session, or sometimes even more than one session in some cases, depending on the catalyst. And so I often get a lot of questions about this. And this is actually what we're gonna demonstrate today. So today is actually going to make this a little bit more difficult, but I welcome that challenge because when we woke up this morning, the Dow was down like 500 points. Dow futures were down like 500 points. So there's not going to be as much gapping. But as you can see with Benzinga Pro, you can very, very easily find this. You simply load up movers, gainers, pre-market session, boom, here's a list of all of your stocks that are trading up in the pre-market, and these are causing gaps. So what I would do here is, the first thing that I would do is I actually want to review these the list here. Now, the first two in this list are warrants. I'm not interested in trading warrants. So we don't need to get into what they are or why or anything like that right now. I'm just not interested in them. Little pro tip, if you want to remove warrants from your results list, all you have to do is apply any filter. So in this case, we have a market cap filter that goes up to infinity. I don't want to do that. I want to put like 30,000 million. Okay, so what is that? 30 billion? So what we're going to do is I'm going to put in some ridiculous number here. So I'm not actually filtering out any stocks with market cap, but because I've applied a filter, now the warrants will disappear from the list. You may want the warrants. Who knows? If you don't, this is actually a little pro tip on how you get rid of that. Now what I'm looking at here are a bunch of different equities that are gapping. So we're going to click on the first one here, which is Grid Sum Holdings, which we have loaded up here in the details tool. Now for the gap and go strategy that I just mentioned, we've got the gap, but as you can see here, we didn't have the go. And I want to discuss exactly how the gap and go strategy is played. Now, you'll also notice on here that I have this yellow line. This is the exponential moving average with a length of 9. The 9 EMA is a very commonly used moving average in this particular strategy. And if you want to know how to add that, let me go ahead and clear it off here. It's very, very simple. This is why we use TradingView charts. They're super simple. Simply click on indicators and then start typing it in. So you can see moving average exponential here. Go ahead and add it. Initially, it's this blue line, which doesn't have a lot of contrast against the black background. Anytime that you load a study, especially one that's overlaid on the price, you can it actually sorts that up here in the upper left-hand column of the chart. So now I can go ahead and click the gear cog for this particular study. In here, this is where you change the length. So if you wanted a 65-day exponential moving average, for example, you could change this number from 9 to 65. We actually want, go ahead, Andy.
Personally, I always have the 9, the 20, the 65, and the 200 EMAs on basically all my charts.
There you go.
I find that most valuable, especially the 65 and 200 on the 15-second, that if 1 minute for people that don't have that, and then the 5-minute and the daily.
So there you go.
You would be amazed at the 65 on any of those charts, the 3 that I mentioned that are my top charts. It's very, very good. Probably the best support and resistance I've ever seen in a moving average.
Wow. Okay, well, there you go. So there's a real life example of exactly how you would change that and what you might also use. Now, for the sake of this example here, we're going to use the 9. I'll go ahead and add the 65 after I finish demonstrating this. So just hang on to that for 1 sec. But then the other thing I'm going to do is I'm going to go ahead and change the style. And the reason is because it's difficult to see this line. So I'm going to change the color from blue to something a little bit more bright like yellow. And then I'm going to make the line a little bit thicker so that I can see it. Press OK. Now the line is a lot easier to see. So what we have here with the gap and go is we have a stock that gaps. It looks like it opens. It gaps up, and there's some action in the pre-market, which I would obviously sit out. Then you can see that this red candle actually brings it into the 9 EMA. Market opens, stock takes off from the 9 EMA. So it looks like we take off from a 135, trades all the way up to 164. So this actually could be a candidate for this, because here you go. You actually just had a pullback towards the 9 EMA. It rocketed off the 9 EMA, and you got up to 165. Now, as I tell everyone, especially new traders, don't bother trying to capture the bottom tick of every stock and the top tick on your sell or whatever it is. That's a fool's game. It's never going to work. Make sure that whatever plan you have allows you to capture the meat of the move, or if there's meat left on the bone, whatever analogy it is that you want to use, make sure that you can capture some of it. You don't need to nail the bottom or top in order to be successful in this. So if we go back to our example here you can see here that it actually does take off right out the open, and you can see down here that the volume is pretty strong. Then it actually comes back in towards the 9 EMA and has a battle. And what I mean by a battle is that, you know, these lines are not set in stone, right? So there's just because a stock price comes back in towards any one of these indicators, no matter what it is, that doesn't mean that if this happens, then this is going to happen. It doesn't work like that. There's always a little bit of gray area. And what you see here is that battle. You see it actually went beneath that line, came back above it, and it's going back and forth. And then one more time, it tries to launch off the 9 EMA, stalls out at 155, trades back down to the 9 EMA, breaks through the 9 EMA, and now this line that was once support is now resistance. And you can see that as the stock sells off, it tries to come back to this line, but it really hasn't been able to regain it and stay on top of it.
Yeah, if you don't mind, Ryan, I actually call this the death M. Anything where it has that higher high spike right there at the open, and then it comes down and makes the lower high. And then every time it comes down and stair steps down here, I always keep in mind who's averaging down in this stock.
Yep.
And you know, when the buyers lose their ground, when the bulls lose their ground, it's not going to come back above your number when you average. You know, it's just going to pop to your number, and then it's going to go down, and then it's going to continue to do that. And
absolutely,
that's what I'm looking at. That's what I see whenever I see this whole stair stepping thing. That's a lot of people averaging down on the position.
And so that's actually a really great point here. So the gap and go, in a perfect world, you buy whatever stock, whatever setup, whatever gap and go setup it is at the open, and then the stock runs all day. Now, we don't live in a perfect world, especially right now with the coronavirus and all the stuff going on. So we don't live in a perfect world, so let's not hope for that. What Andy has just said is he's just given you a really, really great piece of information. Sure, in this particular example, you could have traded this from maybe 135 to like the 160 area if you were following these rules. But if you stayed in there, if you didn't take your profit, if your trading plan was to wait the rest of the day, this would not have worked, because it comes back in. And although it tries to launch again, as Andy pointed out, it's actually got a lower high, and then it continues to sell off beneath the 9 EMA and actually can't break it. The bulls are not in control anymore. And this is actually confirmed by the volume here. So we have some big volume here at the open. And then after this big red candle that took us beneath the 9 EMA, look at how the volume is kind of dried up. In fact, there's a lot more selling volume here, which actually drove the price lower. So, Andy, that's a great spot, a really, really good point. And this actually leads into the fact that these don't always work. So just because you find a setup that you think is important, that doesn't mean it's going to work. Andy, I'm sorry, go ahead.
Well, basically, a lot of people, they come in here, and they hit this thing as a pre-runner down at the bottom before you see this big spike. And I can tell you right now that this is why I use what I call stealth orders. And all a stealth order is just making sure that you get in. If you show your position, if you show your hand, if you tip your cards before you get in, this thing's going to fly away from you. And by the time you get a hold of it, it's going to be at the top and it's going to pull back down on you. And it's not going to go back up until you're out. And then as soon as you're out, it's going to go up to its, wiggle the worm some more. I always say, trade the worm. You're bound to be the catch of the day. And that's what this is every single day in, day out. As you see, what do they do? It just trades down, stair steps down all day. So most people are trying to grab this long. They're trying to chase this. And, as you see what happens. But if you look at the chart, what the chart's really telling you is every time this thing gets near that 9 that you're talking about, that's a good place to add to a short rather than going long. If you can get shorts on a stock like this, which, that's a whole other story.
Whole other ballgame. That's an excellent point, and you actually took the words right out of my mouth. That was perfect. I was just going to say, one of the other things that I recommend, that I never do, and that I recommend other new traders don't do not chase green candles. All right, look what would have happened if you waited and you saw this candle taking off the 9 EMA and that you got all excited and you chased it. You would have been in pain, because it immediately pulled back, and the next green candle that you got didn't even breach the top level of that first candle, and then it pulled back. And as Andy said, it's what is it, staircase or stair step?
I just say stair step down.
Stair step down. Okay, so and so you can see that's exactly what's happening here. Now it looks like we're stabilizing here. So could there be
likely
another
not
run?
Though you're just going to wait for a very long time, and it's going to get even. Basically, it's like, okay, you get out. And things will be good, but if not, we're going to go down for another run. That's how it turns out for most traders, honestly.
Yeah, no, and that's exactly right. And that's I've learned my lesson chasing. Too often. So here, because this actually sold off, the actual entry point that you would have taken in this particular example, if you had been going with the gap and go, is you would have had an entry somewhere between 132 and 138. But again, in order for this to have been successful, you would have to have been out on this first push up. That might not be part of your plan. You might not have had enough size. And Andy and I are going to talk about position size in a little bit here. But you have to have a plan going in. You have to. So hang on a sec. Let me turn my notifications off here. This happens every single week, and I completely forget to do it.
See, when I'm looking at these plays, Ryan, and this thing's running away, instead of chasing, I wait for a nice pullback. And, that's a perfect place to grab it right at that 9 right there. Grab that little play. I'm not even interested in it breaking resistance. I would not have traded it past, see the pre-market highs there, and then as soon as it opened, it got a little bit higher than that. I would have been out before that point. Not to mention, I'm betting that for a quick second, it probably hesitated there anyways.
Yep.
So that would have gave me an indication that, hey, this can go against you. Get out.
So let me actually add to this. All right. Let me actually add to this. One of the other things that I actually like to do if I'm looking at a gap and go is I want to be able to make sure that there is a fundamental catalyst that's going to continue to drive this. Because as we were saying, like we had this pop right off the open here. Something obviously caused this to gap up. And then we had this battle and the stair step down. So one of the things that I like to do is I also like to see what is the catalyst. And in Benzinga Pro, it's super easy. All you have to do is click on the news tab, and you can actually review some of the news that's going on. And as you can see here this morning, there were a number of halts on this. Now, Andy, I know you're quite good at predicting halts, so maybe we'll talk about that in a little bit. But basically what I'm seeing here is I see this news report here that says GridSum announces a receipt of a revised non-binding proposal. Now, I haven't read through this all, but I suspect that this is playing into what's going on in terms of this actually gapping up. This to me, this doesn't look like a huge piece of news that's going to drive this throughout the course of the day. So had I have been preparing this, what we're doing right now is we're actually examining the chart in hindsight, which in terms of like actually learning and trying to examine things, that's okay. But you don't ever want to trade in hindsight because you don't have access to this data when you're actually trying to place a trade. So in this particular case, this would have been one that I passed on instead of actually trying because I don't have that catalyst. And what's great here is that if this first one that you see doesn't have a catalyst that you like, then you can actually click on the next one. All right, so I'm going to click on another stock here. You can see that this stock is also gapping up. We had a sell-off right at the open that breached the 9 EMA, but then we had a huge green candle that took us right through it, and it came back in, and now we're having a huge battle here, and now it looks like we're just starting the stair-step down pattern that Andy just covered a minute ago. So again, let's take a look at the news here. Another press release here. This one looks like something based out of China. So again, nothing here that's really like jumping off the screen that's saying, hey, this might be big. You may want to trade this. I don't necessarily see that. Let's click one more beneath here. All right.
You don't mind me saying so, Ryan. The other one, like the MDGS or the GSUM or whatever that one was.
GSUM, yeah. GSUM.
Basically, those are my bread and butter. I do trade those every day, and I understand the dangers before I get into them. And what I always tell people is it's like the Army. The Army taught us in basic training when we first started. When you're getting it's basically, I'll just go straight to it. I'm up, they see me, I'm down. So if you're running and moving and changing positions on the field, it's you say this in your head. I'm up, they see me, and you better be down by the time you say down. And that's pretty much what penny stocks are every day. I'm up, they see me, I'm down. Most of them, majority, 80% plus. And, getting one that actually is gap and go that continues on and maybe a multi-day runner or whatever, that's not very common. It was a couple months ago, or maybe even a month and a half ago.
Well, and again, like I said, I said at the beginning of this webinar, I welcome the challenge because when we woke up today, the Dow futures were down 500 points. So looking for a gap and go, a gap up and go strategy on a morning where the Dow is down 500 points might not be the best plan. But we had this scheduled. We can't control the market, so we're going to roll with it. And this is, I actually think this is good because it's easier to react when things are going according to plan. It's much more difficult to react when things are not going according to plan. And so you mentioned something real quickly there about penny stocks. And in this particular example, yes, both of these stocks have low prices. But what you can do is you can actually filter that out. All right, this is why Pro is so helpful because it's so easy to use. So what I simply did here is I took the price filter and I took it off 0 and made it 10. And already I've changed the list of stocks here and I've changed what it is that I'm looking for. Let's click on MGLN here. All right, so here's another example. You can see this stock is $67. And what the other great thing about Pro is when you click on these stocks, sometimes you'll actually have a banner here at the top where our news desk has actually already determined why the stock is moving. So here we have Magellan Health shares are trading higher after the company announced the sale of Magellan Complete Care Unit to Molina for $850 million. So it looks like they sold a unit of their business and collected $850 million for that. That caused the stock to gap up. You can see here, this one is actually a little bit easier to trade, in my opinion. So you have a stock here that's gapped up in the pre-market. The market opens, it takes an immediate run up, and then you can actually see it trade back down to the 9 EMA. It looks like right here, it hit it almost to the penny, 66.53, bounced off of that, and then continued above the 9 EMA for what looks like, let's see here, we had this at 9.50 to 10.50. So for an hour, we were above there. You had an hour where this thing, even though it was going up and down, as all stocks do, it actually still stays above the 9 EMA. Eventually, then it actually crashes through it. And as we've already discussed in several examples, former support now becomes resistance. And you can actually see this in the stair step down pattern that Andy has already mentioned. But the whole point of this particular exercise is to show you how easy this is to actually find new opportunities every day. Some of them are going to work, some of them aren't going to work. But Pro makes it real easy for you to find them. And if you can find things that fit your trading plan, you're already going to be in a better position to succeed. Let's click on one more here and take a look.
On that one you were just at, Ryan, I get a lot of questions about that one. Like, is this a bull flag? Is this going to continue on? And pretty much what I say whenever I see that is, as long as it's hanging out below the VWAP, it's really not interesting to me at that point. When we start getting some, the bulls get in charge and we start hanging out above the VWAP, and then it becomes a possibility. It's still not a trade, but
absolutely. And so here's the other thing. So if you're looking for things like that, for flags and pennants and other types of, again, I have not turned off my notifications. So sorry about that. It happens every single week. I've got to get better at this. Anyway, the other thing that you can do is you can actually draw on these particular charts. So what I'm going to do here is, you can see I've actually selected a trend line here. So one of the things that I can do is I can actually draw, click that again. I can actually draw on these charts, and I can see if there's anything that actually meets what I'm looking for, or if there's something that fits into my trading plan. I cannot stress that enough, though, because sticking to the trading plan is going to make things easier for you no matter what skill level you are. All right, so here we go. We're on CODX here. So you can see here that you did have a gap up in the morning, actually sold off beneath the 9 EMA, reclaimed it, traded up above it, and then came back through it. And looks like we've got a bit of a battle here, but it looks like it's actually curling up. So I also got asked the last time that I did this, why the 9 EMA and why the EMA over the simple moving average or a more traditional moving average? So the answer to that is fairly easy. Exponential moving averages are going to react more to recent price changes. So when you're talking about an intraday day trading strategy, a quick in and out, you want to use an EMA for that, especially in this particular example, because this indicator is going to react more to recent price changes, whereas in a simple moving average, it actually gives equal weight across all of the different data points that it's collected. So that's definitely something that you want to take advantage of. Now, does that mean that the EMA is better than the SMA? The exponential is better than the simple? No, it doesn't mean that at all. It means that there's a time and a place for each of these. And what we're talking about right now is an intraday quick day trading strategy that you're going to want to use an EMA. If you want to discern support and resistance, you probably want to use a simple moving average, and you want to back your time frame out so you can actually figure out those points. Andy and I are going to talk about that in a little bit here. So Andy, it looks like we've got a whole bunch of questions here. I want to try and run through some of these if you don't mind. The first question here is, where can I find this video afterwards? You'll be emailed a link probably tomorrow morning that has a link to the video. This will also be posted in the past webinars section of our help site. So real quickly, to access the help site, you just click the help button in the upper right corner here. It will take you directly to our help site, and there is a directory for past webinars. Great question. Next question here. So you leave the pre-market on. So Kevin, I'm assuming that you're talking about the shading that I have on here. Yes, I leave this on all of the time. Andy, does leave the pre-market on? Does that mean anything to you?
I have to have the pre-market on, and as far as having the shading there, it doesn't really matter to me. I consider 4 a.m. till 8 p.m. that's the market, and I do get excited and look for a spike in volume at the open at 9:30. But I'll tell you, a lot of times there's no spike in volume, there's no change. Stock continues on just as it has pre-market, and it seems more and more. I don't know if it's because of the $0 commissions or what's changed, but it seems like it's doing that more often. But
yeah, I agree. So, okay, so we answered that question. What is the 9 EMA setting? Are these charts real time or delayed? So these charts are real time. Art, welcome. These charts are real time. As discussed, the 9 EMA stands for exponential moving average. Let me clear that off here. So can you or Andy talk about halting? I would be happy to do that. I actually leave that up to Andy because he is, as far as I'm concerned, Andy is the halt master. He's got these things down to a science. Is that something you want to tackle right now? You want to save that for later?
Well, anytime you want to go at that, Ryan, that's fine. I always have the halt monitor. I'll if I can go into a side note here. Lately, the halts have been going off so much that I had to turn audibles off on the halts, or else I'm going to have to start filtering them a bit, for maybe filter out some lower volume, because ever since the whole market halt, it seems like halts have been going crazy.
You bring up a really good point. We're in a period where the volatility is not normal. It's higher than normal. And what that does is that creates a whole bunch of different scenarios where stocks can halt. Sometimes just on volatility. Obviously, there can be an SEC halt if someone's not playing nice. There's a number of different reasons that stocks can halt. And Andy, I would completely agree with you. Recently, it seems to be at a whole new level. There seems to be a lot more. So, yeah, I mean, halting's crazy. I generally try to stay away from halts because I don't want to be trapped in a position. I know that you're fairly good at figuring out if a stock is about to be halted. Do you ever trade coming out of a halt? Do you trade going into a halt? Do you trade halts at all?
Well, the volatility that you just mentioned, basically when I hear halt, I go and I check it out if there's nothing else really great going on. And I'm looking to see what it's going to do out of that halt. And, these days we have more garbage than anything.
Yeah.
It comes out of the halt, it's halted again. Comes out of the halt, it's halted again. Halted up, halted down. I try to get in positions, and right as I'm trying, they start to halt right there. I'm trying to get out of position, and instantly, all of a sudden, out of nowhere, we're going to halt again. It just seems to be very controlled, and these halts are more often than they were before.
Yeah, and see, that's the thing. Like, it scares me too, because sometimes when a stock gets halted, you have no idea how long that stock is going to be halted for. I don't want my money tied up. I don't want that unknown factor, right? I want to know that I can actually get access to my capital. I don't like halts. I will say that I've obviously, talking with other people on FinTwit, one of the strategies that I did try for a little bit, I don't necessarily do it much anymore because I've been successful with other things. But one of the things that I have tried before is actually trading a wash out of a halt. And so basically what that means is that a stock halts, and normally it's up. It's up considerably for whatever reason, whether it be a phony reason or a legitimate reason. It's halted because of volatility. Those halts are not very long at all. And then as soon as it opens, you have a whole bunch of people that feel just like they don't want to be in the halt. They don't want to have their position halted. So what they do is, as soon as this halts, a lot of them are in at least somewhat bit of profit, they actually sell and the stock washes out. The price plummets, stock washes out, and that can actually be a good opportunity for an actual bounce. So as the stock is washing out, you can actually buy that and then hope that it bounces back up. Now, catching a falling knife, I certainly don't recommend that to people, especially new people. It's not easy to do. Make sure that you have complete control over your emotions and your position sizing before trying something like that. It can be incredibly dangerous. However, obviously, it can be incredibly profitable. You can have a stock that can move sometimes several dollars out of a halt or in several minutes. So you can have a very short time frame for you to collect that volatility and actually turn that into a profit. But just as easily as it can be profit, it can also be a loss.
Well, Ryan, if I'm trading out of a halt, exactly what you just said is what I'm looking for. I'm not going to trade out of a halt if it just continues going higher. I'm not going to chase that situation.
Exactly.
What I'm going to do is I'm going to wait for it to do just what you just said. And what I do to make sure that I'm not catching the falling knife, so to speak, is this might not be your typical way to explain it, but when a chameleon goes after the little fruit fly or whatever, right when its tongue comes flying out, it starts to pause right when it's about to grab it. You know what I mean?
Mm-hmm.
Like, it sort of seems like it's slowing down at that point. That's when I grab the stock, because that's when it's going to bounce up real quick. So quick, I got to be out instantly. If I'm not, then I'm going back down with it,
And see, so that's a really good point. So what you just described there is you described a setup that you have a feel for. And to me, I talk about this all of the time. To me, that's really important. The more and more that I have a feel for something, the more and more I'm going to be able to battle my emotions successfully. So you've been watching this for a long time, and you're able to see right when that kind of slows down, you're able to pinpoint that spot where you're able to get in and actually take off or actually get a profitable trade out of that.
Right.
Now, real quick, I actually just wanted to expand to what we were talking about here, because now that I've adjusted the price filter, here we have Clorox. We have Clorox gapping up, and we have a why is it moving here. It says Clorox shares are trading higher after the company reported better than expected Q3 EPS and sales results. The company also issued forward 20 EPS guidance above analyst estimates. So I'm going to digress here for about 15 seconds on a personal note. Hey, people over at Apple, do you see how Clorox is trading up because they actually issued guidance? Pro tip, maybe you should have issued guidance on your EPS report yesterday. But I digress. Let's get back to the example. What you have here is you actually have a stock that's trading up on positive earnings. You have a little bit of a flush right at the open here. This could be for profit taking. This could be for a number of reasons, all right? And you actually have this plummet.
Also a great time to buy, sorry.
Exactly, because it plummets right through the 9 EMA, and then it starts to retake it. And it looks like these candles are fairly aggressive and on volume. So as it retakes it here at about 192.50, it actually trades all the way up to 197. Now, this is a very expensive stock. So if I were trading, and I didn't, I had no position on this. if I were trading this, this is something that I would have used options for. As this starts to plummet, if I'm going to, and I'll actually expand that a little bit. If I'm going to catch a falling knife, what's most important is that I have a trade plan and I have my risk managed, all right, or defined, or both, frankly. So the whole point here of using options is that I can choose, before I enter, I can choose exactly how much I'm going to risk, whether it be, if I'm only going to risk $1,000, then only buy $1,000 worth of contracts. If I only want to risk $1,000, but I want to have a slightly higher position size, now we need to start thinking about, okay, where am I going to get stopped out so I don't violate my trading plan? Clorox is an extremely expensive stock, $190 a share here. This is absolutely a situation where I would have used options. I would have not felt as bad as the stock is falling off, because as soon as I buy, I know if everything goes wrong, what can happen here, or what is the worst that can happen? And then I can actually make a plan for how much I'm going to make on the other side. And I can actually factor that in to my risk management equation. So what you have here is you actually have a sell-off right off the open, and then the thing immediately spikes back up. This is a pattern I used to trade on quality stocks a lot, except I stick to the technology stocks. One of my best trades ever was this setup with Square. They had an earnings report that was great. For whatever reason, the market didn't seem to like it. It was up a little bit first in the after hour session, and the next morning it was down. And then right out the open, it just sold off, and I ended up buying, I think I bought my options. I think I spent like $1.20 a contract on those options, and I bought 10 of them. And I ended up selling them for like $3.80 a contract.
Nice.
And it was just like, it was such a good trade, because it took me maybe an hour and a half, and there was only about 15 seconds where I was unsure that I was going to be in profit. And it was right when I bought. And then as soon as it rocketed up, I was in for the gigantic green candle. I wasn't chasing the green candle. Very important distinction. And then I let it run throughout the rest of the day, or for the next, I think it was about an hour or so. I can't remember exactly how long it took. But basically, we call that a feed up trade, because when you're already in profit and you have your risk defined and you have a plan, you can effectively sit back in the chair, put your feet up on the desk, and just wait for your signal to get out, collect your profit, and move on to the next one. So I'm really glad I was able to find this one. Again, super easy. Couple of clicks of the mouse here in Movers. You can actually view the chart right next to it, and you can actually plan your plan of attack here.
Well, something we were saying earlier, Ryan, is first of all, on this one, it has real body, a higher low. And then those lower shadows, and as soon as the market was open there, those are both pretty good indications that this is going to continue higher.
So there you go. There's another data point to help you decipher which one of these are you going to take. Now, on a regular day, what I'm going to do is I'm going to go through at least 10 of these. All right, I'm going to go through as many as I can. We've got, I don't know, 20, 25 here on the screen. But what I'm going to do is I'm going to go through these, and I'm going to pick the setup that looks the best to me. Again, I'm going to look for a gap in the morning. I'm going to look for a pullback towards the 9 EMA, and I want to make sure that the stock has a catalyst that can actually propel it throughout the rest of the market. I'm not really interested on what FinTwit is saying about a particular stock, or there's rumors that this is going to happen and rumors that that's going to happen. That's great and all. And if you're in there and you can capture that, that's great. But I'm not sure that that's going to give the stock the oomph it needs for the rest of the market period, or at minimum, enough time for me to actually execute my trade. I'm not in the business of trying to beat machines. I am not trying to get in front of a machine. I'm not trying to beat an algorithm. I'm not trying to do any of that. I'm trying to actually capture movement. So I don't actually need to buy this stock down here at 189 and then sell it at 197. That'd be awesome, but I don't actually need to do that. There's plenty of movement in here with plenty of time for you to actually make this day trade. So this is a fairly good example here. What platform do you guys trade on? Seems like you need fast execution like Lightspeed or SureTrader. Using Toss, I seem to be only able to swing trade because of the delays. Ryan, I actually do use Thinkorswim. Thinkorswim is my browser. TD Ameritrade is my platform. TD Ameritrade is my broker. Yes, recently there's definitely been a little bit of hiccups. I was actually experiencing yesterday. Today wasn't so bad for me, so it seems like hit or miss. What I will say is that in my experience, There's no broker out there that never has problems. They all have problems. So it's part of the game. It's technology. Sometimes it doesn't work the way that we want. It's just part of the game. So if you want to get around that, one of the strategies that I suggest using, split your capital up into multiple brokers so that you can actually, if you have one at E-Trade, Interactive Brokers, and Thinkorswim, well, if E-Trade's down, you have two other brokers that you can still trade with. You're not kind of you're not necessarily trapped. You can also use this strategy to get around the pattern day trading rule. If your account is still under $25,000, let's say, for example, you have $15,000 and the 3 day trades in a 5-day period just isn't going to work for your trading strategy. Split that money up into multiple accounts, and now you have more day trades in that same amount of period. So there are a lot of people that do that. I know sometimes that doesn't necessarily make sense for people, but that is one of the ways that you can get around it.
Now, in that case, though, I would go more for cash account because you can't sufficiently build a position if you just have 3 trades, no matter what. Especially, I mean, you know what I mean. It's
that's a really good point. That's a really good point. I'm glad that you mentioned that. The other thing is, we actually had this discussion in Benzinga Pro chat the other day. There was a trader that was asking, okay, if I buy once and then I buy again, and then I sell in the same day, how many day trades does that count for? The answer is that counts as 2, because you actually opened up 2 different positions, even though it was the same stock, and then you closed both of those positions. Even though you closed them at the same time, you still closed 2 positions, and that's going to count as 2 day trades. So, Andy, great point about building a position. Very, very difficult to do. And obviously, the thing is now is we don't have trade fees, we don't have trade commissions anymore. So it just encourages people to want to trade more. And if you are still dealing with the pattern day trader thing, then that could slow you down a little bit and cause you to miss things. So that's definitely happened to me in the past. I'm guilty. That has definitely happened to me in the past. Find ways to get around it, keep working at it, and eventually you won't have to deal with that.
One of the biggest things I warn people against is static positions. And the PDT rule encourages people to put big static positions where they feel the stock is going to be the best. Well, if you feel the stock's going to be the best at that point, then somebody smarter than you, they also feel that. And it's going to possibly go the opposite way than what you're thinking after you get in there, Right. And if you have a big static position, there's nothing you can do. You're just sitting there, what do I do now? Hoping or, whatever. Yeah.
And so that's a really good point, because that's also why I try to trade stocks that aren't, or that I try to trade stocks that are liquid. I want to be able to get in and out of that position. I don't want to be trapped. I don't want to be in the position that you just mentioned, where I'm sitting there, I'm thinking, okay, what do I do? How do I get rid of this? Or getting rid of these shares is going to cause the price to move by X amount. Like, that is something I want to avoid at all times. Like, I am not, that is not part of my trading plan. If I'm going to do a quick trade, I want to be able to get in and I want to be able to get out. And liquidity is absolutely something that you need to stay on top of if you actually want to trade like that. Are you exiting with limit orders preset then or market? So I pretty much only use limit orders. Occasionally I will use a market order. I would say 95% or more of my orders are limit orders. Great question, Ryan. Do you guys cover Canadian market TSX? No, not yet. We actually have a lot of the Canadian stuff in the back end. We are working on expanding our coverage. The TSX market is probably going to be the next one, so stay tuned. That is coming. I do not have a timeline for you. Great question. Christy asks, do you trade off the 1 minute the same way that you trade off the 5 minute? Andy, I'll have you take this one after I answer here. What I will say is that the 5 minute is my favorite chart.
Absolutely.
It's the period is my favorite. The candles, the way that they build, the way that the candles close, and then the new candle starts. I'm the most comfortable with the 5 minute. Now, in my broker, when I have like my screen set up a particular way, I have a daily chart on top that's long, so I can see into the past on this particular stock in case I do want to make a price level or a support and resistance level based off of a moving average or the top of a particular candle. And then I also pair that with the 15 minute, the 1 minute, the 3 minute, and the 5 minute. The main chart that I use besides the daily, because everyone needs to use a daily at some point as far as I'm concerned, the intraday chart that I use the most is in fact the 5 minute. So Andy, do you have any preference on your time frames? I know you were mentioning the 15-second chart earlier, but do you have any color to add to that?
Well, basically the 5 minute, that's my primary chart. That's where I'm looking for my patterns. That's like the one you have up right now. this actually looks like a nice setup. The problem with this is that, what's the market going to do? So you have to keep that in mind for a play like this. But, I'm looking at the daily. You have to look left on the daily. I mean, the last thing you want to do is have a really beautiful 5-minute and not realize that you're, like I said last time, a big, you're way up high, star in the sky sort of thing in the daily. And this thing's going to just crush back down and fill that gap like you've never seen before. And it's just not something you want to be in without realizing that you're way up, like where the stock's never been before.
Absolutely.
You're up 300% on this play, and you don't realize the price action's never been there. And 5-minute looks great. And next thing you know, this thing crashes like you've never seen in the 5-minute. It looks like a demon drop waterfall,
So that's a really good point. And the other thing is that I'm not, I do have my opinion on where I think the market is going to go over the course of time, within a day, but I don't base all of my trades on that because I'm often wrong. And one of the keys to becoming consistent is learning to admit when you're wrong and then being able to change that. Yesterday, I was sure Apple was going to beat earnings. I was like, you know what? I'm going to do this. I did it small because I didn't want to expose myself too much to a binary event. And guess what? I was wrong. Initially, the numbers looked great. Stock sold off. Stocks looks like it's printing 289 right now. So we're still down in the day. So losing is going to happen. There's no trader out there. None. Zero. Zip. Ever. There's no trader out there that has got to a point where they don't lose anymore. It's part of the game. How you handle that is going to help lend itself to your consistency. 2 more questions here I want to roll through real quick. Great ones. Nikos is asking, how many years experience in practice did you need to become consistent? This is one of my favorite questions I ever get because I get to share some success and some failure stories. And then do you check longer time frames for support and resistance and pivot points? So we actually kind of touched on that, so I'm going to take that one first. Yes, I absolutely use a daily chart. I absolutely, like, one of the things that I'll do here, so looking at a daily chart, one of the things that I'll do here is I'll like to put in price levels. So I'll go ahead and click on this, and I'll select the horizontal line. You can see here that it's actually Alt-H, and you have the ability to add it to favorites. I'm going to go ahead and do that here. All right, so I'm going to take a horizontal line. I'm going to go ahead and click right here. All right, because this is a price level, then I want to click right down here. Oops, I have to actually click that again. Excuse me. Click right here. All right, so yes, and then you can also use moving averages like in order to do this. So let me, I gotta spell it right, for heaven's sakes. Let's go. All right, moving average. All right, let's go ahead and change that moving average from the 9 moving average to the 50-day moving average. All right, so you can see here, this can actually help you pick out spots that might be support and resistance, or we can actually increase that. Let's do the 200-day moving average. And now you can actually have this plotted on the chart. So this is a line that's going to react to different movements, but will also help you determine support and resistance lines. So great question. Now, I had another real quick one here. Can you filter volume on the movers tab? Yes, you can click the filters menu over here. Volume is one of them, as well as average volume, and you can apply that filter. Remember, the volume numbers that you're seeing in here were from the pre-market. Okay, so this stock here that's up on 99 shares of volume, obviously, take that with a grain of salt. That was in the pre-market. It's obviously different in the regular session. Now, to get back to the question I really wanted to answer, then I'll turn it over to you for any color you want to add, Andy. I'm sorry for the run-on answer here.
No problem.
How many years of experience and practice do you need to become consistent? There is no one answer to that question. You could, if you were very disciplined, you could become consistent after a week or two if you worked hard enough at it. It took me way longer than that. It took me about 2.5 years to get consistent. My first account ever that I opened, I blew it up, lost everything, 100% loss on the account. Took me about 6 months to actually lose all of that, but it wasn't that big. I didn't really put myself in any type of bad position, but it happens. It's part of the game. I went back, I looked at what I did wrong. I realized that my emotions were really screwing with me. As soon as I saw something go against me, I panicked and sold, would use market orders at that time. So that was part of it. So it took me years to become consistent. I've seen people coming right out of college dabble in the market, and within a year they're consistent. So there's no set time range. There's no, like, you're not like, if it takes you 6 years to be consistent, you didn't do it wrong. If it takes you 10 years to be consistent, you didn't do it wrong. If you became consistent through practice, learning, and admitting your own mistakes, that's a success. The time frame almost doesn't matter. Just don't always protect your capital. Rule number 1, always protect your capital.
Position sizing.
So Andy, do you have anything you want to add to that?
Well, just what you're saying right there, that's why I tell everybody all the time, position sizing is key. Like going in with a big static position, a large position, is probably the most foolish thing you can do, because you don't get to get that experience. It cost me around 30 something $1,000 and thousands of trades before I could consistently, basically before I could just tell you that I know I can't be taken out of the market now. I believe that obviously the man in the mirror is the worst enemy. So, if I all of a sudden start disobeying all my rules and everything, I can get hit pretty hard. But, from where I'm at now, not a problem. I'm going to be just fine.
And your experiences, that's a common one, Andy. That's a common one. It takes people varying degrees of time to become consistent. The most important thing that you can do is keep practicing and preserve your capital. There's a quote that I've said this before. I'm going to say it again. A quote from a FinTwit trader. I'll actually give his name because I respect him so much. His handle is Modern Rock. I've been following him since I started this. He's one of the best Twitter traders that I've followed. He has a whole bunch of different rules. And one of the things that he said early on that I read is that you only need to get rich once. Don't blow it trying to do it overnight. And I'll never forget that it was so impactful for me that I will never, ever forget that. Consistency is key. Don't bet too big. Make sure that you size your position. Now, Andy, do you have any, speaking of position sizing while we're talking about it, do you have any hard and fast rules for position sizing? Is it 2% your account? I try to do that. I sometimes go over that, but do you have any guidelines or anything that you follow?
Well, basically, maximum I'll use is about half of my entire capital in a day, but I want to split that up between at least 10 trades. So my goal is to get 1% of my account. So I'm looking to get at least 0.1% on each trade for 10 trades, let's say, and obviously that works out much better, in my favor for some positions. I'm getting 6% or, something like that. Yep. So I'm getting there a lot faster. But I just like to split it up into many trades, because if I have a 92% win rate, I have a lot higher likelihood of closing the day green if I'm splitting that up among many trades. With a $0 commission world, I don't see why you wouldn't.
Exactly.
It doesn't really make sense.
Great point. So another question here. Do you have a Zoom session on just indicators? No, we don't. We're trying to expand that and cover more and more. One of my personal projects that I'm looking to undertake pretty soon here is I would actually like to develop an education course, an online education course based off of chart indicators, patterns, and then trading strategies. So if that sounds interesting to anyone in here, let me know. You can also, if you want to hear stuff like that, you can also email me, Ryan. Let me actually put that in the chat here. My email is ryanfaloona@benzinga.com. If there is stuff that you would like to see demonstrated here, I want to hear about that. Let me know. So we see Mark here says, I made 8K immediately and I lost it. And now I'm down 6K. I'm trying to get better before I lose more. I think Benzinga is great for these purposes. Okay, Mark. So first of all, I gotta say I applaud you for saying that out loud. That's already half the battle. There are plenty of people that will never admit that they've lost. So the fact that you're already doing that means that you're already on the right track. All right. So definitely pat yourself on the back for that. The other thing there is that you were saying that you think Benzinga is great for these purposes. I can't tell you how much I appreciate that. That's one of the ethos here at the company. We're definitely trying to help people, especially people that are either new or feel like they're struggling. Obviously, people that have been doing this for a long time, they have something to fall back on. So I really, really appreciate that.
Ryan, if I could,
yeah.
I try to tell people all the time, you don't need to just go out and spend thousands of dollars on some course. There are so many traders out there. Benzinga has many. You're one of them, willing to help you and tell you the little things that you're going to learn. And not to mention, within a several $1,000 course that expires within a year, how much of that are you actually going to pick up and retain? I'm not really trying to talk bad about the other traders out there trying to help people, but at the same time, there's so much free information. Load up on that before you go buy your really expensive course, at least to prepare yourself, I would say.
Yeah, no, absolutely. And definitely take it in stages, because Bobby Knight is famous for saying that the brain cannot learn what the posterior cannot endure. And basically what he's trying to say there is that if you just sit in a desk all day long, eventually your brain's going to shut off and not be able to retain that information. Well, it's like that when you're self-teaching too. Even if you're not in school at a desk, if you're overloading yourself with information, sometimes sometimes that stuff is not going to stick. So take it in baskets or in increments, because and especially, and like Andy was saying, learn some of the free stuff early on so that you don't use capital during that, but you can also build off of that. You don't necessarily need to go out and drop a whole bunch of money in order to learn. There's many different things that you can do. So really great point. We have a ton of questions here. I definitely underestimated you guys. I'm really, really sorry. There is more questions than we are going to be able to get to. I absolutely love seeing this. Andy, I can already, we're not ready to go just yet, but I can already say, I think we're going to need to have you back here pretty soon, because it looked like there was a lot of interaction here. A lot of people that are asking questions. Hopefully you'll be up for that.
Absolutely.
I'd like to go through some more of these questions as quickly as possible. Would that be all right with you, Andy?
Yeah,
I'm going to kind of run through them. If I get to one that you want to answer, go ahead and stop me and we'll go ahead and do that. I see buy, sell buttons on the screen. Can Benzinga be linked to a broker like Lightspeed? That is coming. This is actually the reason that I have it on my screen, is because we're doing some internal testing. Yes, we are trying to allow you to link your platform to a broker. I do not have a list of all of the brokers. I do not know if Lightspeed is one of them, but we are trying to do that. We're trying to allow you to trade right from Pro if that's something that you want to do. Great question, Colin. What determines whether a catalyst is strong enough to trigger the why is it moving feature? This is another great question. This is actually not one that I can answer because I don't work on the news desk. I actually don't do this. What I can say is that the guys that work on the news desk are extremely experienced. All they do is sift through news. That's literally what their job is, and that's literally what they do every single day. So they're actually able to find different news stories that one might be more liable to actually move a stock, whereas another one might just kind of be fluff. The guys on the news desk are extremely good at discerning that. So what they do is, and in the case of earnings, this is a rather easy one. If the earnings is good, if the call went well, they're gonna post that up there. But sometimes, it takes a little bit of digging. And we're very fortunate that we have news professionals doing that digging. So, Colin, another great question. I wish I could be a little bit more in depth with you. If you want, I hope I'm not putting Brent on the spot, but go ahead and use the intercom chat button in the bottom right-hand corner and type in news to get connected to the news desk. He may be able to give you some more color on that. Okay, my apologies. I'm just learning options. How to trade Clorox options, as you stated before. How do you know from the chart at which point to enter? Okay, so this is really the $64,000 question. This is where the rubber meets the road. You don't necessarily know. Okay, there is no way to necessarily know. And as I was saying earlier, there's no study that's going to tell you for sure something's going to happen. So what's more important than that is having a trade plan and being able to manage your risk. So sure, I can come on here. I can look at this chart. Let me get the horizontal line tool. I can pick the bottom of that candle right here, add a line, and you can actually see that this line, look at this. This actually lines up to some support and resistance from a few days ago. Actually, it looks like here there were several days in a row where this line held. And so what happened when this stock dropped right to it? It bounced off of it. Even though we can show that in this example, that doesn't necessarily mean that's going to happen in the next example. What's more important is that you are actually able to come up with a trading plan and be able to say, okay, if it works, I'm going to do this. If it doesn't work, I'm going to do this. Because what you want to avoid is when something's going against you and you're sitting there saying, what do I do? That's what you don't want. That's when mistakes happen. That's when emotions take over. That's when you lose money. So this comes up to what is comfortable for you? What fits into your trading plan, and how are you managing your risk?
And one of the things for me, Ryan, for options is, two questions. Is this premium killing action, or is this something that's going to be in my favor? And, a lot of like the SPY lately, gap and trap all day long, premium killing, for how many days now? We're just starting to get some capitulations, sort of, the lines are giving way ever so slightly with the SPY. So, if you got something that's it's starting to really consolidate and it's not showing any clear, distinct direction, your option premium is just going to continue to deteriorate.
That's right.
It's going to continue to go down.
That's right. And so that's the other thing. Options might not fit into your trading plan. And if they don't try to force it because I'm mentioning it here. That's also the wrong thing to do. Definitely try to learn what works for you. You're going to be so much more successful if you can do that.
I think options, using them sparingly, like you said, you just had a huge trade. I went up 3,200% in my options account, just sparingly on CCL puts and SPY puts at the best time. And then I tried to force some trades in the SPY, force some trades in Boeing, and, just ate up that premium. But luckily, position sizing, like we said earlier, that's the key to preserving your options account, especially
Absolutely.
at times with the
Absolutely.
gap and trap
Position sizing is more important than any indicator on a chart you'll ever come across. I'll go ahead and throw that out there right now. That as a blanket statement. Do you guys monitor SPY and futures for indicators as well as intraday technical analysis? Yes, I always have an eye on the SPY. I do watch the ES, not necessarily. Well, no, I would say I always kind of watch the ES. I know we don't have futures quoting in the platform. We are looking to add that. I definitely keep my eye on the macro market. That helps me figure out what it is that I'm actually going to do. What's the difference between LMT day and GTC? Said those are different types of orders. LMT stands for a limit order. Day means that order will only be open for a day. GTC stands for good till canceled, meaning when you put that order in there, it will repeat every day until you cancel it or until that order is filled. Because my stop order did not work for the next day. So it sounds like you had a limit order that was a day instead of a limit order that was a good till cancel. And the next day when the market opened, the limit order from the day before was turned off.
Hey, Ryan, if I could throw this one out there.
Go ahead.
Maybe we should do one on orders in general, because somebody, they had put in a stop limit order, so they got stopped out. They repurchased, and I think unfortunately they repurchased short right at the bottom, and the thing spiked up and basically crushed their position.
Yeah.
Terribly.
Okay. So that's real sad. That is easily avoided. Know what you're trading. Know your platform. Know what you're trading, and know what the different orders are. Andy, I would love to do a kind of a more instructional webinar on what some of those things are. I would absolutely be down for that. I think that's a great idea. What is limit day? That, as mentioned, that's a limit order of the day. What are the different potential peers level 2 after chart analysis? Which one is more important to look at? Okay, so I am not as concerned with level 2. Andy was talking earlier about stealth orders. There's also another term called iceberg orders, where you can hide your position sizing in the level 2 chart. Level 2 is not as important to me as peers. If technology, for example, is moving as a whole, if that's moving as a sector, that's more important to me than if there's X amount of orders sitting on the ask. So again, that is also more specific to your particular trading plan. Do you use hard stops, or are you fast enough to run when it goes against you? Great question. I often don't use hard stops, and I'm not trying to advise this to other people. The reason I don't is because sometimes you'll notice that those stops will get flushed out. You'll see it. So let's take Clorox for an example here. Let's come up with a hypothetical example. You're looking at this and you say to yourself, you know what? All right. So after it ran up, it came back in the pre-market here. It tested this area right here. All right. And then it ran off of that. So you know what? That's going to be my stop. That's the new support. If the price breaks through there, I'm going to be stopped out. Well, let's say this downward spike here took you right through that level. If you would have stopped there, you would have been stopped out of this trade, and then immediately it rebounded off of that. So I try not to use hard stops. I try to use mental stops. Again, what's more important to me is I actually stick to the plan that I have going in. What price range do you day trade? Because I use options, I don't really have a price range. I'm more concerned about volume and liquidity. What is the percentage? What is that percentage on margin? That looks like that's a follow-up question. I'm unsure as to what you're referring to. I'm sorry. Is there a greater need for a basic course in charting? Andy, that question was directed at you from Art Evans.
So can you repeat that, Ryan?
A greater need for a basic course in charting. So I think what he's asking here is, how much significance would you put on a charting course?
For me, I mean, you really need to understand what upper shadows, lower shadows, real body are, higher highs, lower lows, where to look for support resistance, where a chart pattern's broken. I mean, if we have a spike up like we saw earlier on GSUM or whatever, and it pulls down, you see it consolidating, and then all of a sudden at the tip of that consolidation, it breaks down lower than the big meat at the beginning of that consolidation. That's a broken chart pattern. That's no longer looking good. Stuff like that, real simple stuff. It doesn't take much you don't really need to I don't believe that you need to be an engineer in trading and charts in order to make this happen for yourself. But at the same time, the more you learn, the better it's going to be for you, obviously. So I would never limit any of the, how much you're trying to learn with charts or anything. Go for the moon. But, you don't really need it, though. It's not
Yeah.
that important.
All right. And then one last here before we sign off. How do you decide whether to buy options or buy stock on a particular ticker, or do you do both? So the answer here is that, yes, I will do both. For me, if I'm trying to, again, I'm big on having a trade plan. I'm big on defining your risks. So it's very easy for me to do that with options. But it also matters on what I'm trying to capture. If I'm trying to capture an intraday day trade like this, I'm probably going to use options because I don't have to tie up as much of my capital in options. And since I'm looking for a quick move, options often give me that. Even if they go against me, if I have my risk defined ahead of time, not really a big deal. I can actually wait that trade out. For investing or for a longer term trade, I definitely want to buy the stock. The reason is because maybe that stock pays a dividend. If the stock does pay a dividend, you only get paid on the shares you own. You don't get paid dividends for owning options. And so that's just one reason. The other reason is obviously if you buy stock, time is one of your friends. As an investor, time is one of your biggest allies. You voluntarily give up one of your biggest allies when you trade options. So with that in mind, make sure that you have a plan going in and make sure that you know exactly what you're doing going in. Options can be very profitable. They can also disappear in a heartbeat. So great question. Andy, this was an awesome session. I really appreciate you taking time out of the middle of the day to join me here. I would love to have you back. I would love to get more insight from you on how you trade and how you actually do this. So can we do this again in the future?
Absolutely. It's an honor, Ryan. I love being on with you talking about trading. I mean, you would think an hour would be enough time, but it's nowhere near enough time. I mean,
It
we probably
literally
go for
feels
9
like we
hours.
were at this for 20 minutes. I looked down and I'm like, oh my gosh, we're over. I
Right.
gotta
Yeah,
wrap this
exactly.
up. It felt like we were only going for 20 minutes. So I want to be respectful of everyone's time here. Thank you guys very much for joining us. Again, there will be a replay available. It will be sent via email, and we will also have this replay for review on the help site. So I'm going to demonstrate that here real quick. I actually have a tab open here. If you go to our help site homepage, here it is. The fourth section down is past webinars. If you go in here, you will see a lot of the past webinars that we have. Andy, here's one of your other webinars that's still in here. So this is where it's going to be. It is going to be in there later today, probably around 7 or 8 Eastern would be my guess. Thank you all for joining us. Andy, again, thank you. Again, I'm Ryan, and for the rest of the Benzinga crew, until next time, traders, happy trading.
Thanks, everyone.